Holy smokers, I just bought over $22,000 worth of Alibaba shares, ticker symbol BABA. So I want to go through all this with you guys here today. I want to show you the amount of shares I bought, what price I bought those shares at. I also want to give you the 3 core reasons on why I bought so many shares here today, okay? Usually I don't buy this amount of money all in one day, but there are 3 core reasons on why I decided to go ahead and do this. This company, by the way, is reporting numbers in about a week or 2, so that's going to be very big. I'm kind of like crossing my fingers and hoping it goes down. I would love to build Alibaba into a 6-figure position. So we'll go through the 3 reasons on why I want to do this. Hope you guys really enjoy this today. So first off, I bought 40 shares in my public account. So public account, anybody in my private stock market membership group can see that. By the way, I sold off a ton of shares of, I sold off all my shares of one stock in particular. If you want to get in my private stock market membership group, I'll pin the comment down there for the link to it, and I'll also give you guys half off if you want to take advantage of that. But in that account, I bought 40 shares, $177.77. I love that, all those sevens. It must be the Vegas in me. I love all those sevens, guys. That's good luck right there. So $7,100 in that account. And then my another account, I bought 85 shares, $178 I paid in that particular account. And that one I bought over $15,000 worth there, basically making it into a $22,000 plus position. Once again, this is kind of uncommon for me to go and purchase this many shares in a day. Usually when I start adding positions in stocks, it's usually $2,000 to $5,000 positions. But being that I feel like this company is so undervalued, we'll get into why I feel so undervalued here in a second. But being that I feel that it's so undervalued that, and they're reporting numbers in a week or 2, that I'm like, I've got to buy, I got to get a big stake in this company built just in case it shoots up after earnings. Because the last thing I wanted to do is be like, oh, hold off on buying, even though I feel it's a great deal here. I hold off on buying, it shoots up on earnings, and then I never buy because I'm like, oh, maybe it'll come back down, then I just don't end up buying or something like that. So I'm like, I want to get a big stake built already, and then hopefully it goes down on earnings and I can, you know, make this in a monster position. But we will see as time goes on. So first off, the first reason why I love this company is this company has an unbelievable long-term vision. You can tell this vision by listening to 2017 Investor Day, okay? Every single person on their team has an unbelievable long-term vision. Every single person on that management team. Jack Ma has instilled a culture of long-term vision. This is reason number 1 of 3 why I invest in this company. Of all the companies I own, I don't own any company that has this type of long-term vision. These guys are so focused on the next 5 to 10 years and building this business, and you can understand why this company is worth nearly $500 billion. It should be worth $1 trillion right now, by the way. You can see why this company is built into such a massive beast, because these guys are so focused on the long term, so focused on hard opportunities, long-term opportunities, that this is why this type of company has been built up, and this is why they will succeed in the future. Every single person on the upper management team, from the CEO, Daniel Zhang, from the CFO, which CFO Maggie Wu, by the way, most CFOs, they don't even talk about long-term vision. They're just all about short-term numbers. I was amazed to listen to her. She sounded like another splitting image of Jack Ma talking up there. It was amazing. It was amazing to hear, and so powerful because it's coming from a CFO, and CFOs are usually the most boring people in the world. They're all about what's going on in the short-term numbers. You can just tell there's a culture of long-term in this company, and that is amazing because very few companies have this. And Jack Ma, who's the executive chairman, is one of the pretty much the face of the company, all right? This guy is an unbelievable visionary and has such a great job of execution that he does, okay? It's one thing to have long-term visions and be like, we're going after this thing. It's another thing to execute on those long-term visions you have. He's done a phenomenal job. The culture he's instilled in this company, that I feel like even a day, you know, I don't know when he'll actually leave the company as far as executive chairman. Maybe it'll be 5 years from now, 10 years from now, 20. I don't know when it will be. But I feel like this is a type of company that he's instilled the culture so well that I feel like they'll do well into the future. Almost like what Steve Jobs did with Apple, okay? Many companies, it's hard to instill a culture like that. I feel like Steve Jobs did an amazing job with Apple on his return. He really understood that if this company's going to last for the long term, I got to instill a culture into this company. Jack Ma has done this 100% with Alibaba, in my opinion. So if Jack Ma was to go away tomorrow, it would stink, but at the same time, like, I feel like this company would be just fine. Reason number 2 why I bought these shares is because this company is experiencing phenomenal growth, okay? It's amazing how big this company is and the type of numbers they're putting up. We're talking about 61% year over year total revenue growth. 61%, 62% year over year core commerce revenue growth, all right? Look at the cloud revenues, up 103% year over year. Are you flipping my flapjacks? They're flipping it correct. Oh my goodness, guys. Look at the consumer numbers, 617 million mobile monthly active users with this company, all right? Unbelievable numbers. Look at every single category across the board is doing phenomenal with this company, okay? China commerce retail up 56%. China commerce wholesale up 28%. International commerce retail up 63%. International commerce wholesale up 13%, all right? Their logistics service is a new business. That's why you don't see a number up year over year there. That's a new business they acquired there. Other category up 101%. Cloud computing up 103%. Digital media and entertainment revenues up 34%. And another category up over 8% there, guys, meaning 61% revenue growth year over year. This is a type of revenue growth that you would expect from a startup, a very small startup company out of Silicon Valley or something that's got venture capital money. Not a company that's worth nearly $500 billion, guys. This is amazing stuff this company's doing, all right? Look at the net income. This is a company that's still not even really focused big time on net income, but net income is still increasing very fast, all right? 35% year over year up on the net income. Non-GAAP diluted EPS up 32% year over year. And once again, this is not a company that is focused on profitability yet, as far as they're a very profitable company already. But in terms of let's maximize our net income, let's maximize our EPS, this company's a long way from there right now. This is a company that's still very focused on massive growth, okay? Kind of like an Amazon is, but in my opinion, this company should be valued more than Amazon because their growth is actually more impressive. And as far as profitability, they're actually more impressive in the profitability category as well. So if we look here, all right, the only segment of this company that is really bringing in, a net income right now is the core commerce category. The cloud computing company, or part of the business, they're not even focused on making money there yet. They're just focused on revenue growth there, all right? Because that's a huge opportunity that they'll be able to expand into. Digital media and entertainment, that's a drag on the business right now. Innovation of initiatives, that's another drag on the business. So those are all drags on the business right now. But on the cloud computing side, and especially on the digital media and entertainment side, those are going to be unbelievably profitable businesses long term over the next 5 or 10 years. They just haven't turned on the profit engine that they're worried about growing it, acquiring customers, getting everybody into the system, and then they can worry about profit more long term. Right now, it's all about revenue growth there. So when I look at long term, cloud computing, when I look at their digital media and entertainment, those are going to be straight profit engines 5 to 10 years from now. We're just going to push this company's profitability up to higher and higher levels, okay? Then you got retail on top of that. That's expanding very fast, and that's already a very profitable business. It's amazing, guys. The third reason why I ended up buying these shares is because flat out this company is undervalued, okay? This company right now, you would think it would have a forward PE in the maybe 40 to 50 range, if not 60 plus, because of how much growth this company has. No, the forward PE on this company is in the 20s. Are you kidding me? Are you kidding me, guys? It's like a joke. Are you kidding me? You're telling me this company's grown revenues across the board 50, 60+%. You're telling me I'm getting this company for a forward PE in the 20s. You're telling me that this is a management team that has unbelievable vision, knows how to execute on long-term vision. I'm getting this company for this amount of price. Like, this is a joke to me, guys. This is an absolute joke. It is one of the best deals I feel. It's probably the best. Oh man. So I said last week or a week ago or whatever, 2 weeks ago, I said Facebook's probably the easiest money. Apple's probably the second easiest money in the stock market. I would say Alibaba is probably second or third easiest money to make in the stock market. It's right around there with Apple in terms of the like it's almost a no-brainer. You're getting a company here that forward PE, this company should be valued way more than it is. This is a high growth company. This is a high growth company with much less risk than most businesses have that are high growth, because most businesses that are high growth like this, growing revenues 50-60%. What do we know about them? Most of them don't make any money, okay? They don't have any profitable segments, all right? This company has a massively profitable business already, and it's saying we're gonna funnel those profits into these other businesses and grow those and grow those and grow those over time. So it's an unbelievable opportunity. You know, I'm looking forward to hopefully building this into a bigger and bigger stake. We got $22,000 so far in it, and like I said, if it goes down on earnings, I hope it does, and I will be loading up probably another 20,000 plus after earnings and another 20,000 after that, and we'll build it into probably a six-figure position. But for right now, I'm very happy with that one. I think we'll do great long term. I would love to hear your guys' opinion down there in that comment section on what you feel about Alibaba. By the way, make sure if you want to get my private stock market membership group, I'll have it linked down there as a pinned comment if you're interested in doing that. I'll let you in today for half off. So hope you guys enjoyed this. As always, thank you for watching. Have a great day.